Good afternoon. It's Tuesday afternoon. We have a short webinar today to just cover a segment of the One Big Beautiful Bill Act. So it's called OBBBA. Now, the sector we're covering today is related to payroll. So if you are a small business owners and you run your payroll and do not rely on the system to give you update, know what you need to update, then go from there. Then you will identify and what the payroll company is doing for you and how you're going to talk to your employees and when you know that these changes are actually beneficial to them. So let's just get going with that. And today's topic, payroll side of provision changes. So this is our website, folks. And you notice that communitycpa.com, if you go onto our website, you can find a lot of information, especially on the top of the function bar. You can become our client by simply do onboarding with us, or you can have appointment with us, video appointment with us by clicking appointment, right? If you're our client, you will have a client portal. If you are just doing payroll with us, you will have the payroll portal. And of course, right in the middle, that yellow button is pay invoices. This is where we get rewarded by the good work we have done for you. And of course, everything we talk about today or yesterday, before, it is all deposited into YouTube channel, Community CPA. So if you just go to youtube.com, type in Community CPA, you will see this round logo come up to you, and you subscribe to our channel, you will get the updated knowledge. Sometimes you don't have time, you don't even listen to the webinars I have here, but just the topic itself will tell you that what is new, what kind of things are going on. So when you needed it, you can always come back here to get that information. And I have 2 books on the market, and you can buy them from Amazon. But of course, it's not done. This whole business series has 4 books. 8 a.m. you start a business, 10 a.m. you grow, and I am doing the 2 p.m., which is expansion, expanding your business. Then of course, 6 p.m. is retiring from your business. So hopefully I will pull out the 2 p.m. soon, which I felt like I couldn't really do it that fast because I am still in the process of expanding community CPA. So, when I don't feel like I got there, it is hard to finish the page, goes, oh yeah, I got a book to guide you. How could you guide anybody if you haven't really gone through that yourself, right? So it makes sense. All right, and all of our webinar, we have this no responsibility disclaimer in the PowerPoint, which is to encourage you to take responsibility of what you learn on the internet. We do our due diligence, but that doesn't mean we are always correct 100%. So you want to look at our webinars and choose, for the same topic, you want to choose the one that has the newest time, right? So because our knowledge here really do expire. When the new act come along, a lot of things are not the same anymore. So you want to know the newest, the most accurate information as of today. 6 areas I want to update today. I want to talk about temporary deduction for tips, temporary deduction for overtime pay, and I want to talk about paid family medical leaves credit. This is for employers. So if you do that for your employee, you have this credit. And enhanced employer-provided child care credit. It is also related to the flexible account. So we will talk about the child care side of the credit and deduction. Student loan repayment exclusion is also employer-related. And employee, you don't see that on your paycheck because your employer actually can do that for you. Elimination of fringe benefits. Some fringe benefits are getting away from us, so we need to talk about that. So you as an employee, and you know what's going to happen to your W-2. You as an employer and a business owner, you know what need to be reflected on the W-2 for your employee. So it's a knowledge that affects both sides, right? So let's get going with that. Temporary deduction for tips. This one only enacted for 3 years, from 2025 to 2028. So let's do an overview of this one. So the OBBBA introduced a temporary above-the-line deduction for individuals who receive qualified cash tips in occupations where tips is customary before January the 1st, 2025. So what I am saying here is that this particular deduction for tips is working for 2025. So when you file your 2025 tax return in 2026, you need to see that already happen to you if you have a tip column on your W-2. All right. So what about the above line deduction, which means that it is not part of the Schedule A? It is going to come in before your AGI. So there will be if you remember a long time ago, we have this moving expense deduction, right? You remember that? So, and we also, during the pandemic time, we also had educator expense deduction. Now the educator expense deduction got moved to Schedule A, but above the line just means that it is going to come together on the same page with your W-2, your salary, and then there is a deduction for you. You can reduce your salary, so that's above the line, and this is codified under new code section 225, and so that means it's written into the law and applies for the year of 2025. So you are having it. The maximum deduction, though, is up to $25,000 per year per taxpayer. All right? And of course, it is not like if you make a lot of money yourself already, that doesn't apply to you. That's why they have an income limitation. So if your income as a single filer is above $150,000, let's say you got a W-2 for $150,000 and more, then you are running out of the threshold, so you're not going to be getting that deduction. That deduction is reduced by $100 for every $1,000 of the income above the threshold. So just make sure that your threshold begins on $150,000 as a single, but if you make $160,000, that $25,000, that whole amount reduced by 100. So that's the deduction rules right now in the law book, right? So you don't have to worry about the standard deduction and the itemized deduction. This is above the line. So that's that. Of course, then you say that, oh, what kind of requirement is on the employer side? On the employer side, the reporting and the compliance are a big deal. So IRS is responsible for publishing a list of occupations that customarily receive the tips, then in 90 days after this act. So, it came up on July 4th, right? The act was signed into law by President Trump in early July, 90 days. So we are saying July, August, September. By the end of September, the IRS will say, okay, this restaurant qualifies for that. That hair salon qualifies for that. So they will give a clear guidance on who qualifies. And, what if, people argue that, well, we are attorneys, but we also get tips. So can we count on that? And so those are not considered customarily receiving tips. So that we're looking forward to that guidance. And then, of course, for the employer, for the business owner, and or for the payroll runners, the payroll people like ADP and the paychecks, and all of them are need to in compliance with this particular treatment. So there need to be a place where you put the cash tips amount in there, and then there need to be a place you can put in the recipient's occupation. Of course, if you are business owners of this restaurant, you're not working as a waiters, and then you should not, the tips is not what you made, so that would not be your occupation. So there are things will coming in to help the employer to be compliant. There are things IRS would do to help us to be more clear with what the next step is. So right now it's all in the cooking stage, right? You just know that if you have tips and your income is under 150,000 as an individual, 300,000 as married file jointly, you can deduct that $25,000, 25,000 tips that you earned. So other considerations, right? So they're talking about no double dipping. So what they're saying is that because you have this deduction on the tips, so you cannot enjoy what we call the qualified business income deduction at the same time. So those fine details, it will work out. And what will one thing comforting is that if you use TurboTax to file your tax return, and the TurboTax program will help you to not double dip. They will have questions for you to answer so that you will know that you are not double this benefit. Then on the employer side, you know that even though the tips is non-income taxable for the 25,000, but you still need to pay Social Security, Medicare. That you don't lose. You have to continue to do that. The key takeaway is that this provision provides meaningful tax relief for tip workers, right? Especially the one in the hospitality and the personal service area. The employer must prepare for the new reporting obligations, and the potential payroll system updates is definitely needed. And the taxpayer should ensure accurate tip reporting. So to make sure that you got that deduction. So, basically when you make tips income, it doesn't count into your total income anymore, $25,000. So maybe certain income would allow you to have a certain benefit. Now you know that reporting tips would not hurt that because it will be reduced. So that's one takeaway for folks who are relying on the income level to certain benefit, right? For employer, for our small business owners, you know that right now you want to encourage your employee to report tips because it doesn't affect them the same way like it used to. All right, temporary deduction for overtime pay. This one is temporary. It goes from 2025 to 2028. So what the Act says is the Act introduced a temporary above-the-line deduction for individuals who received qualified overtime compensation. So basically, the only compensation someone gets for overtime are the people who are not, they're not exempted employees, right? They don't get a salary. They get hourly rate. When you work on the hourly, obviously, if it is over 8 hours, if it is over 40 hours in that week, you are eligible for overtime pay. That overtime pay is normally 1.5 times of your hours, right? So if you work 10 hours overtime, you actually get paid for 15 hours regular rate. So that overtime, right now, Code Section 226 says that you do not need to pay taxes on this. This provision applies to tax years beginning 2025. So you already start having that benefit. So of course, there's a maximum deduction, and there's also phase-out period similar to the tips. So non-itemizer, so if you use itemized deduction in the Schedule A, you still qualify. So this is similar to the tips. Eligibility of a new overtime deduction must be overtime pay required under Section 7 of the Fair Labor Standards Act. So that actually determines what kind of occupations you have, whether you are a exempted or non-exempted employee. And that's a strict rule for that. In the restaurant business, other than the restaurant manager, most of the people from kitchen to the front, they're all hourly employees, so they all qualify for the overtime compensation. Exclusivity, taxpayer cannot claim both overtime deduction and tip deduction for the same income. So if you are working for this restaurant person, a restaurant business, you got tips, you got overtime, this is the same income. So basically you're subject to that total of 25,000, right? Not 50,000. So, on your tax return, you're subject to the combined effect of both tips and overtime. Filing requirement must include a valid Social Security number. Married employer must file jointly to claim the deduction. Missing Social Security number is treated as mathematical error, so the IRS will correct that for you immediately without needing to do audit on your tax file. And of course, the overtime deduction also have employer reporting requirement and also have IRS responsibility. So those are the things as a business owner you want to know that you need to report, and you need to report your employees overtime accurately. Some restaurant business owners, they give the kitchen workers are working 5 hours overtime every week. So they give them a lump sum income, saying that, oh, that's your salary, $4,000 a month. That's not good enough, folks. You need to split that out, know exactly what overtime portion is in order this employee to not pay taxes when they run their 1040. It's very important. So one, make sure that, and as a business owner, you also want to make sure that this is employee, not your contractor. If you have a contractor should be classified as employee, then you want to fix that classification issue, because that could come back to bite your butt really severely, and you can never sit down again with that injury. So make sure and you understand the compliance requirement. It is a good time right now, business owners, to consult your payroll processing firms, because this rule comes in for 2025. We are already half year gone. So what happened to January to June? That is what you need to do, estimate. That's what you need to figure it out. So work with your providers quicker. Don't wait until the last day on December goes, well, how do I account for those? And or your employee come back to you, goes, I want you to redo my W-2 because I want to have the overtime listed separately for me so I can get some deduction. And you don't think those tax preparer will tell your employee that? Of course they will. So when they go to do their taxes, they're going to come back to you. So, small business owners, I just want to say that you want to make sure you start working on that right now. Don't wait. All right. Number 3. So the other two, the tips and the overtime, these starts in 2025. So don't wait. But the rest of the 3 I am going to talk to you about, they all start in 2026 because they still have the regulations for 2025 that is still available from the Job Act. So 2025 is going to go through just as normal. Then in 2026, you have this change. So this paid family medical leave credit is available to employers, okay? Not employee, because employee will benefit from your policy. So let's say I run a business, and then I told my employee that you go ahead, take your family medical leave, and we still, as the employer, we still pay you some money. So you say that. So the credit for the employer equals to 12.5% to to 25% of the wages paid to the qualifying employee during the family medical leave. This is to encourage the employer to pay your people when they are on family and medical leave. This credit is available to the employer, and we still have that right now, but this is the one that it will be in 2026, the new one would come up. The paid family medical leave credit was originally a temporary provision, right, in the Job Act, and offered the tax credit for employer who voluntarily provide paid family and medical leave to employees. This act made this credit permanent and ensuring long-term tax incentives for the employer, for our business owners who support work-life balance, right? So this has become permanent. So after 2025, business owners, you still have that. Then, of course, the qualified employee, so in this 2026 version, is actually had made some improvement. So the business owner, you can elect to treat the employee who otherwise not eligible to make them eligible for this treatment and, shrinking the qualification from 1 year to 6 months. So basically, you can hire someone, and in January, by June, this person goes, my wife is sick, I need to stay at home for 12 weeks. And you, as a good-hearted employer, business owner, you say, I'll pay you money for you to stay home for 12 weeks. So the credit comes in. The credit comes in says that, and you can take 12.5 to 20% of the salary you paid and to use that as a tax credit. So that is what that is. So now the 2026 new law allow you to make that election so you don't have to wait for a year to qualify. The employee can qualify in 6 months' time. All right. And qualifying leave must be for reasons covered under the Family and Medical Leave Act, and such as birth, adoption of a child, care for a seriously ill family member, and the employee's own serious health condition. So those are the ones qualified for this one. Employer number 4. Employer provided child care credit. So basically, the laws, this one is also in Act in 2026. Right now we do have, but it is being extended permanently. So starting from 2026. So credit rate increased 40% for regular businesses, 50% for eligible small business. So, that means that if the employer decide to set up daycare in the basement for the employees, then if the small business owner, which means that his income is really low and less than 31 million is such a big number, but literally a lot of small business can do it, and 50% of that cost, okay, and capped at 50,000, 500,000 for regular business, 600,000 for small business, and those caps, that can be a credit, tax credit, which means that if I am a small business owner, I establish a daycare down there in my basement, and 50% of that was of 600,000. That means I take 600,000 as my tax credit. If I pay 600,000 on taxes, I'm getting it back. All right. So those are big benefit. It is it's adjusted for inflation, and it is expanded to include third-party intermediary arrangement and joint-owned or operated facility. So it is not like you have to own it 100% yourself. It can be a joint-owned, and it can also be the third-party intermediary arrangement. And what is that means is unknown. I don't know what is third-party intermediary arrangement means, and I have not come across one, but at least you know that the qualification for the employer-provided daycare does not limit it to the one you opened up and can be more flexible in definition. Flexible spending account limit, that is the one related to all our employees. So basically, the 2026, it will be 7,500 instead of 5,000. All right? It allows employee to set aside pre-tax dollars to pay for eligible daycare costs. This one you are familiar, right? And this daycare, and normally if you have young children go to daycare, you should absolutely do that. So basically, your $7,500 W-2 income would not pay income tax. It's pre-taxed. So let's say if you make $10,000 a year on W-2, then $7,500 stay away. You only pay income tax on the $2,500. Does that make sense? Okay. So that is kind of the flexible account limitation that related to the child care. This is in 2026. Student loan repayment exclusion. This is related to employee when you have a student loan, but your employer, your business owner are so good, they're covering your expense. So if they cover you up to $5,250 a year, that does not land on your W-2. It is not taxable income. So this exclusion is made permanent starting from 2026. 2025 is still the last year. The Job Act is still here. So it is temporary, ends at the end of 2025. But this particular repayment plan exclusion is going into the future years. So that is something you want to know. If you are getting reimbursement from your employer and you know that you didn't show up on your W-2, you know why? Because this is the one that allows the employer to do that. Otherwise, you will have other income on your W-2 that's subject to income tax. All right. Now, the last one. Okay. The last one related to the business owner and their employee. So elimination of some fringe benefit. Fringe benefit adjustment, some pre-tax benefit like bicycle commuting and moving expense reimbursement, no longer excluded from taxable income. That means if your boss pays for moving expense to you, okay, you moved, from one place to another in order to work, that reimbursement is taxable. It used to be not, but now that is gone, okay? No longer excluded from taxable income, requiring payroll policy update. That's what the employer, business owner need to know what happens. So of course, the most famous one is the $20 per month and eliminated. That is the bicycle. If you don't do metro transportation, you come with a bicycle commuting, and you can get $20 from your employer for riding bicycle, and you, as a recipient, you don't need to add that into your income. So that is gone. So 2025 would be the last year that is available. Now, we looked at our 6 items, right? So we talked about the 6 items related to the employer and the employee, and how you, what you are looking at, what the business owner should be start thinking. And especially the first 2 are coming in 2025. So everything else you can just say, oh, okay, I don't know, I don't care, because it is all the same. That's okay. So when you work on 2025, in 2026, is still the same. But the first 2 items related to tips and overtime, these are big changes on your W-2. So make sure you work with your payroll providers right away. Estimate January to June if you didn't do that, and making sure that your employee knows that is coming and they have that benefit to enjoy. what you have on the screen right now, it is the list of our partners in our firm. And if you desire to know more, you can contact one of us. And we also have this YouTube channel. Like I said, every webinar you have, we had is in the channel. So you can go into the channel, search for the topic or keywords, then it will bring up all the videos that we had related to that, related to those topics. I do have someone told me that they were binge watching Community CPA's video. He literally didn't sleep for 24 hours because he went through so many of them. Then become really good friend with me because they are looking at me and for 24 hours. So when I talk to them, their first thing is, you don't know me, but I know you too well because I was binge watching all of your videos and for literally 24 hours straight. So that is a compliment to the usefulness of our video. So I hope you find the same thing in here. And the last, not least, we want you to know that we open Monday to Saturday from 8:30 a.m. Central Standard Time to 5:30 p.m. Central Standard Time. And you can contact us via all kind of ways. Email Catherine@communitycpa.com. Literally, if you know our first name, like my first name, you email Ying@communitycpa.com and I'll get your email. So you can call our office number as well. So I hope you have a great week and I'll see you again on Saturday.